everybody. Welcome to This Week in Pre-IPO Stocks podcast with me. I'm Clint Sorensen, Chief Investment Officer at Wells Shield. It's an outsourced CIO and investment research company. Nick Fusco, CEO of PM Insights, the greatest pre-IPO secondary market pricing company on the planet. And Evan Cohen, founder and chief operating officer of withvincent.com. It's a media company focused on alternative investments. Okay, gentlemen, CoreWeave IPO'd on Friday. What happened? So it was flat. It closed flat. Okay. So first of all, the valuation was way down, right, from where they wanted to originally come out. It came out at 19 billion. They were talking about 35 billion a couple weeks earlier, right? And it closed flat in the market. And then today, we're recording this on Monday, but intraday it's down 5.8%. It was down even closer to 10%. So, what are your thoughts? Like, maybe Clint, we'll start with you, man. Like, what do you think is going on with the market's perception of this business? Perhaps that might be a nice way to start. Like, what do you think?
I mean, look, there's no other way to put this. This is just an unmitigated shit show from beginning to end. In terms of they just couldn't generate enough demand, and the market was already weak. They stepped out. It smells of desperation. If you're a CoreWeave shareholder pre the IPO, you got to be pretty pissed off, just with the way this has been handled. Even with NVIDIA stepping up, they stepped up pretty large if you think about it. And I know that there's a lot of controversy around NVIDIA and CoreWeave's relationship, but I think this is an issue of broader sentiment related to AI and AI scaling, and I think CoreWeave is a victim of that, right? In terms of what's going on in the broader marketplace from a sentiment perspective. I just read a piece over the weekend, and there is a lot of questions as to this CapEx super cycle in AI and if the spending is going to continue at the same clip. And I think there's a lot of folks, at least a lot of institutional investors I read that say that's tapped. And so when you start to think about that, when you start to think about things from that perspective, you have to start to rewrite a lot of the fundamental discussion about these companies in terms of your growth rate expectations. And I think this is just like we saw with the DeepSeek, right, in terms of challenging AI, all this is just pointing to fragility on the AI narrative. We all know AI is here to stay, but there is fragility in a lot of these assumptions. And I think this is a case in point. To be clear, this is revelation of that fragility, in my opinion.
Yeah. Okay. So Evan, I mean, that said, do you think this is going to impact other companies that might be thinking about going public? Is this like a CoreWeave only issue, or is this, you think, going to impact, like, I know Klarna's coming down the pipe. There's some other people. Are they going to maybe take pause since this didn't go as well as planned with CoreWeave?
I mean, it's hard to say no to that. I mean, it seems very likely now that, sort of what Clint said, the broader sentiment around these sorts of investments that's a risk on play in a world where people are taking risk off the table. There's geopolitical risk, there's interest rate risk, there's just a lot of things that people are concerned about right now. Recessions are being talked about a lot, and investing in the IPO, investing late stage, these are risk on bets. We've benefited a lot, over the last year and a half, 2 years in this market with a risk on environment. And I think that is sort of starting to, it's sort of tap out. So I know we've talked about it here on this podcast where these valuations have always been market driven to some extent. Like what's the buyer willing to pay? There isn't a ton of price discovery. It's kind of like someone throws a number out there, someone's like, okay, that's what we're going to pay, and then it pushes up, pushes down a little bit. But look, this is exactly like there's a world where this stuff has been very hot, it's been very frothy, and I think that some of it needs to reset a little bit so that investors feel like they're getting a good deal, or else they're probably going to sit it out and wait to see what happens.
Yeah. I mean, Nick, what do you think about? Do you think that? I mean, I'm a big believer that the market's always right. So if the market says this thing's worth 19 billion, it's worth 19 billion, like full stop, right? So, but do you think that there's maybe a perception, because there was a lot of negative news around CoreWeave like the last weekend about their business, right?
Microsoft pulling out of agreements, them not delivering exactly where they need to be, but then for every bit of bad news, there's a bit of good news, and usually
Correct.
you bottle up a bunch of good news and wait to pop it right before the IPO too.
That's
right.
right. That's right.
But yeah, I think with how quickly this company grew and the fact that a lot of these contracts are so chunky and they may have proved that they're not as sticky as they want them to be,
Yeah.
that's pretty problematic. And yeah, it's interesting to see that 11 months ago is when they did their Series C, right? And that was exactly at the IPO price, and now it's trading at like 17 and a half.
Right.
But we did see a run up in the secondary market, pointing directly at where it was supposed to IPO.
Yeah.
So that's really, really interesting. So the market reprice on that is as Clint described, pretty freaking harsh.
Yeah.
A lot of people got burned, including just folks that came in on that C, just amounted to nothing, and now potentially they're not in as good a position today as they would have been just waiting on the side. Well, definitely not as good as just waiting on the sidelines or finding a new out. So, yeah, I think holistically, it's not a good sign for the IPO market. Yeah, it's probably going to reprice Klarna too, and then maybe have the other ones. We were all scratching our heads last week about who else is going to IPO, and maybe it was Discord, and maybe it was somebody else. But why not just have more tenders?
Yeah. I think that's
hang private longer. And I think this is case in point for CEOs and execs of these companies to say, hey guys, look to your staff. Look, we don't want to do that. We can facilitate tenders for you. We can take care of you guys. And they've got a point now.
But what does it say, Nick, to the valuations? Like the valuations that people are doing these tenders at?
Yeah, that's inflated. That's potentially inflated too. Unless they're sponsored by external parties, like the Lego involvement in Epic Games, like all of that stuff is like really cool. But then you have the opposite with SpaceX, where I've historically felt that those tenders are low.
Right.
So it really could go both ways. But it is a way for the CEOs and the execs of these private companies to think longer term than what the public market would force them to do. To say, all right, do we want to artificially go a little bit low here or artificially go a little bit high here? Maybe in the case of like a Stripe or Revolut. So yeah, I think people are realizing there's a lot of flexibility that they can have in the private market without the IPO. So this was damaging to the market in general, not just CoreWeave.
Right.
Unless you're Newsmax, right, which is up what, like 300%.
Yeah. Newsmax ripped. Yeah, it ripped. Yeah, it's interesting. Look, I really like this like data center space. There's a whole bunch of companies kind of like CoreWeave, right? There's Lambda Labs, there's Together AI. They're kind of operating in this, data AI focused data center or inference space, right? It's like I read a lot of the stuff that was going on in the press over the last 2 weeks. It was very negative, right? I can't tell you, outside of just revenue growing so quickly, that was like the sole positive thing that anyone talked about with the company. Man, their revenue grew a lot fast, right? But outside of that, the amount of debt on the balance sheet, their forecasts, there was like this whole thing where they had one set of forecasts and analysts were coming out with a different set of forecasts. It was like 4x lower. It was just a lot of like negative news around the business model itself, right? So it like, I gotta be honest, it made me pause a little bit to think about what's my investment thesis around this space, this like AI data center space, because it's an AI infrastructure play, which I think is like a better risk-adjusted return investment opportunity than perhaps like these, like the platforms, the AI platforms, like the OpenAIs and the XAIs, or even like AI apps. But if the market's going to perceive these things as potentially, net negative because of the balance sheet or whatnot, or that just doesn't believe, to Clint's point, maybe there's just like, there's a potential lack of belief that the revenue is not going to be there, or the capital is not going to be there going forward, right? That's kind of makes you want to think. So if you still believe in it, I kind of coalesced around this weekend, like I'm still a believer. So this is a good interest point. Like I would say this would probably be a nice entry point to come in, right?
Yeah. I mean, so I'm a believer in theory and in like it rationally makes sense. I think that I'm a believer in the demand. I
Mhm.
do believe in, I think Clint has sort of hammered this note home before, like there is just not enough energy creation to power the data centers that are expected for these growth rates to be realistic. I
Right.
just don't know. I just don't know how they're supposed to do it. And I think that that's one of the big things that is holding a business model like CoreWeave behind, like it's holding it
Mhm.
back, right? Because I heard over the weekend from someone who's in the energy industry that even Grok or XAI, like their data center in Nashville, they're speccing it to be 1,500 megawatts, and they're only
Mhm.
contracted 100 megawatts by the TVA. So they need to get like substantially more energy, and they're not contracted to get it. So how are they going to?
Yeah.
They can get all the GPUs they want, but if you don't have the energy infrastructure to power it, you're going to be in a bind one way or another.
Yeah. But you hear that though, right, Evan? And that to me is where it's like, okay, well, that's like, if there's a revenue pull through, right? So AI agents, like whatever, like apps, AI apps, and they're pulling through and there's demand for all this AI usage, like somebody's going to solve for that electricity problem. I know it's not like just something you can like, snap your fingers and it gets fixed, right? But you would think that there's like a supply demand thing. Like people will just continue to pay more and more and more until finally someone's like, man, we're gonna make a nice sweet margin on standing up a new electric plant or whatever it might be.
Well, you can go two ways on that. You could say, all right, let's accommodate the energy demand by making more nuclear plants or something, or you can go the other way of, hey, you don't like your light bulb? Get an LED,
Yeah.
more energy efficient server cluster, whatever it might be. I think you got to have both to a certain extent, right?
Yeah.
Better means
Yeah.
of bringing power in, and then also more efficiency in and around the data center.
Yeah. I mean,
You
I know you
definitely
can't
do.
build this stuff. You can't build a power plant like overnight either, right? So, but to next point, I mean, there's probably, folks will innovate, right? They'll find ways to use less electricity and get the same amount. Maybe there's different types of chips that will get built, right? Like if there's demand, people will innovate, right? And find solutions like these guys in China did with DeepSeek. You
Right.
know what I mean? Like the market will find solutions to problems. But
people are doing that here in the States. They're using gallium oxide silicon combination chips for data centers to be far more efficient from an electricity perspective. That's a whole business. I mean, we'll continue to innovate. Problem is we need massive government support, and I think you're going to have to get that. Trillions are going to pour into AI, and AI infrastructure. The question is how and when, right? So that's our questions plural. So that's kind of what we're facing now.
But so Clint, that's where I'm at. I'm at like there's trillions that are going to go into it. AI, like you mentioned earlier, AI's here to stay. So like if you can get your hands on CoreWeave, that's an AI data center at a $19 billion valuation, or maybe just below that, may not be that bad of an entry point, right? To get into that company. So
I mean, I'd wait and watch and let the sellers out, and then I'm a trend follower when it comes to anything public. It starts to move positive and on a positive trend on a decent time horizon, medium term, right? Then you could start to position size well and take some risk. Right now, I think it's an abyss until you start to see some clearance, and then you'll figure out what that low point is. I mean, we saw the same thing with Facebook. Facebook ended up being an incredible buy long term. These things sort themselves out in the market. And to your earlier point, market's always right. So let's let it figure it out.
Yeah. Okay, cool. Fellas, let's talk about model context protocol. And I know none of us are developers on the call, right? But my read on, so this is, just to explain what this is as best I can, my understanding is this is effectively like an API type construct, right? So one model, it's a standardized framework for AI models to talk to each other, right? So the way that I see this kind of being important, and the reason I wanted to talk about it with the group, is Anthropic and OpenAI both came out and said that they're adopting this protocol. So now it's like very relevant, right? I also think that this bodes well for what I would call like AI apps, right? So my understanding is if everyone starts to use this, if I have an AI app or an AI agent and I want to go talk to your AI agent, they can use this MCP perhaps to have that communication in a more meaningful level than just two LLMs talking to each other, for example. So My question to you is my question for you guys, and maybe Nick, like we can start with you, man. So like, do you think that we're going to see some more what I would call like standardization? I mean, this whole AI agent thing and AI apps, this is all new stuff, right? I mean, so like to me, this is a signal of like maturity in the market with this MCP protocol. Do you think we're going to see more stuff like this? And do you believe this bodes well for what I'm calling AI apps, right? Like that segment of businesses that I think is starting to emerge, right?
For
What
sure.
do you think?
No, I think this will make everything a little more streamlined, or what's a there's any sort of standardization will make it easier to enter, right?
Okay.
And we could think about this as, we serve up our data on a website. We think that's pretty cool, But if I'm a hedge fund, sure as hell, I'm going to take that data through an API, and I'm never going to log into your website ever. So if we could have more of those barriers to entry softened by, it's a very clear, are we using Wi-Fi or cable internet or Ethernet, like whatever it is now, that bodes well. And even for us, a year ago, I don't think I would have touched it with a barge pole. We are beta testing now very, very shortly with an AI agent, with an external
Okay.
company, someone I've known for a couple of years. They kind of spun into this space and said, all right, we're changing tact, and we're going the AI agent route, and we're going to facilitate this for hundreds or thousands of customers. Do you want to give it a go? Like, absolutely. Like, wow, happy I played in traffic long enough to know you and what you're up to. But we very much welcome the ability to have something that's easier to work with in-house. And if there's an interoperability between OpenAI, Anthropic, and any other LLM, it just adds the flexibility, I think. So
Right. Right.
I'm not the technical guy. I don't know enough about it, but the fact that that's being offered up to us in such a way where there were more yeses on the call than nos, that's pretty cool.
Okay, that's cool. So, I mean, Evan, this MCP protocol. I mean, I remember back when people, when like OpenAI launched. This is like 2 years ago now, and people were saying we're going to interact. Like, we're not going to really use a phone anymore. You'll just talk to your AI, right? And then planes will get booked, and hotels will get booked, and groceries will get delivered, right? I have to imagine like this MCP protocol is like a giant step forward in that type of reality happening, right? So. I mean, but I'm also like really interested in the business model, right? So to Nick's point, like if you have an AI app and it's not an app on your phone, I mean, I guess it could be an app on your phone, right? Still. I mean, look, this is Evan, this is the stuff I'm thinking about because I'm thinking about companies to invest into, right? So like I have to formulate opinions about what the world's going to look like. Do you have any thoughts around that experience, right, with these agents, or have you heard anything of what this experience would look like with these AI apps or AI agents?
Yeah, and I think that it's a parallel. I wouldn't say it's a perfect parallel between two companies that were pretty well known and established in like the early 2010s. There's one called Zapier and the other is called If This Then That, which were effectively this like interweaved protocols where you could connect multiple apps with like functions. And you could create they would be the glue between two different applications, and you could create automations that from one app, if an action happened in one app, it could relay that information to another app and create like an automation.
APIs for dummies, right? APIs
yeah,
for dummies.
Exactly. And it's a perfect example because like you didn't have the Zapier app on your phone. You just interacted with the primary app or the secondary app where the action was getting received or the action was getting taken. That's a good
example.
And those businesses turn to be, I mean, Zapier is an incredible business. I mean, I do think that they're in the process of getting disrupted right now via AI, but like it was an incredible business used by tens of not hundreds of thousands of customers and created automations and efficiencies all over the tech stack from 2008 to 2025. So really impressive technology. I think that this is very similar to that, but probably on the magnitude of more efficient and more interesting because the Zapier stuff is really about a decision tree, right? Like something comes in, you have to know like effectively beforehand what you want the action to be based on the information coming in. And then based on that information, you'd have to take a decision of, okay, I want this to happen, or I want this to happen.
Right.
The using LLMs or generative AI, you effectively could have it think for itself. So you could have a variable of information coming in on the inside and an exponential number of outcomes happen on the outside based on what the AI believes is the most efficient thing. So I think it's a big breakthrough. And I think that it's really awesome to hear that the big frontier models are embracing this sort of technology, because one, it's a rising tide. It allows like every single AI app, even the big guys, to sort of come up, but it also creates kind of like an app store effect where like anyone can now create a business and connect to this MCP and get access and distribution to potentially tens if not hundreds of thousands of customers. Right. So I think it's a pretty big and exciting moment for AI, probably like the next big paradigm since the launch of ChatGPT 3. But there's still a lot to prove out there. And I mean, I think this is just the beginning, as I've said for many, many, many episodes.
Right. I mean, so Clint, do you think that OpenAI, I mean, Anthropic signed up for this MCP protocol, right? And then OpenAI jumped on as well. Do you think they gave up some value, perhaps? Like, I mean, in theory, they kind of came up with their own like Apple App Store, right? That was like native to just perhaps OpenAI. Do you think they gave something up here by adopting
I don't.
this?
I think I think the way I view it and the way I understand it is this is more about tailoring to the user. And so it makes a lot of sense to adopt a protocol that allows for persistent memory and storage of data tailored to the individual. That's the ultimate end game, is to deliver products and services in an automated fashion to the end user. It starts first with code and building. And to Evan's point, we've never been closer to manifestation of ideas into businesses than we are today.
Right.
That's exceptional. I think the big problem, the one we haven't solved and will be solved in the courts, is the data heist that's going on. And what this allows is that data heist to become more pervasive. Now your personal data, because your assistant, once you sign off on the MCP, it's about persistent memory of the model itself. It's about tailoring its responses in the applications you can build, which does pave the way for agents, et cetera. But it's about tailoring that to the individual and to the user. And I think that is highway robbery from a data perspective at this point. We should all be getting paid for packets of data that we give access to these platforms for. But I'm excited about it from a user perspective, but I'm a sucker just like everybody else.
Can I ask a question?
Yeah, go ahead.
So why do you believe, like, tell me why, Clint, you believe that data has a lot of value? Just go ahead.
Yeah, no, follow up. I'm sorry. I thought you were done.
No, I was just gonna say, like, tell me why is that data so valuable in an AI-driven world?
Yeah, so the data is valuable in an AI-driven world because ultimately what they're doing is they're taking what I give it, right? And then they can create products and services tailored to me. And a lot of platforms are now pivoting, like Perplexity's pivoting to advertising models. So the moment they take my data and they give it to or sell it as it's theirs to an advertiser, then they have robbed from me. And that's why I think it's valuable, because it's valuable to the advertising agency that's buying that. So there's been a transaction that's established value to my data. How in the world is it the packager that gets paid and not the data source? And I think that value has to come to the source.
But I guess, so here's the thing that I like when I think about this, a future where you have an AI assistant that handles your day-to-day online transactions. You actually remove the advertising layer to an extent that exists today, right? Because you would go to Google Flights or you'd go to Kayak and you'd put your information in, and then you would get the service, and then they'd use cookies and things to tailor your data. If you have an AI model doing that, you're never going to the website, but the data is still going there. So right now it goes to Google, right? And it all accumulates to Google, and in the future it could accumulate to like a Perplexity. I don't see that very different from today.
It's an IP issue though, right? All of that. So if you can keep everything in-house, and this is something that we fight, we're a data company, right? We keep as much of the IP in-house as possible, because I'll agree with Clint every freaking day of the week. On the moment that IP goes out, somebody else is going to reap the benefit of that value. Like even just things that you won't even think are terribly correlated. We'll use marketing because it's easy. The instances where Clint purchases something online on a rainy day are substantially higher than a sunny day, because a sunny day he's outside, a rainy day he's at his computer, right? So like any bit of data is really driving one of those many inputs to him making a decision. So yeah, we would definitely say the data is the most integral piece, and the model behind it is just kind of like making it work. You know, this is why we're kind of saying a really lousy data scientist with better data is going to outperform an exceptional data scientist with minimal information.
I guess my thinking is like at the end of the day, we're the user and we don't get paid for our data today. So why would it change in the future?
Yeah, and that's the problem. I'm not sure it will. But you know, ultimately, as soon as someone else can be compensated from your data, I feel like there needs to be value that goes to the source of that data. That's my big philosophy. If we're going to live in this utopian environment where all these AI models aren't going to move to advertising, which I highly doubt at this point, seeing that pivot's already happening, and then reading what was going on in terms of, you look at the amount of users in the business to business side of ChatGPT in terms of who's signing up for Copilot, number of users on Copilot versus number of users of ChatGPT. It's a lot slower on the enterprise side, which is going to carry the weight from a compensation perspective. How do we know all these models aren't going to shift to advertising? And then again, we've been bamboozled into giving up all of our personal valuable data to these entities that now know us more intimately than ever. And at the end of the day, we just can't fight with the technology. You know, we're suckers, right? If it's free, Clint, or the product, right?
Fair to say that
exactly
people are
right.
fair to say people are inherently cheap. So like if given the chance to pay $10 a month or not pay $10 a month and have your data get sold, people will probably be like, yeah, go ahead and sell my data. I want that for free. Right.
We're going to see that in the EU actually right now. I think Facebook is, because of some like privacy law and some lawsuits they've had against EU regulation, they're going to be launching, it's like $20 a month or €20 a month for ad-free Facebook, or free and you have to opt in to like the personalized ads business and agree.
That'd be interesting.
No one's going to opt in.
We'll see. That'd be interesting. I'll put your money in your mouth. I love it. I'm like,
I love it.
Yeah. All right, fellas, let's hit on Cursor at the end here, just real quick. So Cursor is an AI app, right? It helps people code. It's like an AI code assistant, right? AnySphere is the name of the company. Cursor is the product, right? So they were at 150 million ARR in November of 2024. They're already at 200 million ARR today, right? So that's like what, 4.5 months? Pretty incredible increase, 33% increase in revenue. But Evan, you just said that you heard that they closed this round. Go talk about that.
Closed.
Man. Yeah. The round.
Oh no, I mean, I just saw. I saw from a Twitter source that claims to be a very well-known venture capitalist, but they're anonymous.
No, it's all true on Twitter. It's all true. Of
course. Yeah. Okay. It closed at 9.6 billion. It was led by Thrive, I believe, in A16Z.
Okay, gotcha. So that's like
Post Money.
Come on. Post Money. That's an AI app, fellas. Okay, an AI app that a company's worth 9.6 billion, right? That's like no joke. That's firmly a large cap stock. Okay, the 4 billion is the crossover from small cap to large cap in the public markets, right? So, like, I got to tell you, Harvey's out there, Cursor's out there. I think we're going to start to see like a whole bunch of AI apps coming, right? So, I mean, Nick, do you know of any other, or do you guys track or have data on any other, what I guess what I would call AI apps? Any other come to your mind? Those are the two that I'm familiar with right now. It's Cursor and Harvey.
They've all come up so fast, I'm not going to be able to spew them out and name any, but type it in the comments and we will tell you what coverage we have, and very happy to go back with it. Okay. But I will say they are coming up in speed in terms of valuation increases faster than anything else, because they come out of nowhere with that time from 1 million to 100 million revenue is just outrageously quick. You know, and Cursor absolutely is deserving of this, and I just wonder who's going to be stepping on their head and piggybacking it on it later, because you know, anything that we're talking about with Zapier could be better and stepped on than OpenAI or UiPath was, and that's down
Right.
like 80% since they IPO'd.
Right.
And then there's going to be another one, and then another one, right? So I really think these companies need to figure out how to really secure their moat to assure that they're sustainable. Otherwise they will end up IPOing and they will be left with the public, and then it declines. We've had a lot of bad SPACs, a lot of bad IPOs. But this is meant to be next level. I think we brought it up 1 or 2 weeks ago, but through some developer network of mine, Cursor is head and shoulders above the rest.
Okay.
In terms of coding output.
Yeah. So Clint, let me ask you a question. What do you think? If you're looking to invest in an AI app, like you're doing investment due diligence, right, on one of these companies, what do you like? To next point, you got to have a moat. Like, what's your secret sauce? Like, what's the thing that differentiates you and your business versus others? Like, what do you think that is, or is there? Like SaaS companies have, I think, a perceived moat, right? Or I'll call it a certain investment thesis that you want to see that company have. Like, is there something similar, or have you put any thought to like what that would be for AI apps?
Yeah, I mean, I think right now, anytime it's early stage like this, right, in terms of the market, you got to look at the total addressable market for whatever they're trying to solve for. And they can be first, they can be fast, they can be materially cost differentiated, or they can be the best from a quality perspective. Most of those moats are very difficult to ascertain at the current level, other than the being first model. So, really, you just got to position size well. If you're going to invest in these things, you've got to have a well-balanced approach, and you got to understand that some are going to be home runs and some are going to be zeros. And that's just the way it is. So you got to kind of take a VC mindset when you're if you are going to invest in AI apps, in my opinion, in these businesses, because I still think any moat is fragile at this stage, especially with the platforms, because I believe the platforms could, if they wanted to, step in and destroy any app built on their platform. And I think that's a major risk to me. So doing DD, that would steer me away from making the investments unless it was a very small position size and I was spreading it out among a bunch. And I was trying to convince myself that which is an illusion, that I can somehow pick those AI apps better than what's going to happen in the future. It's all the same. It's just a bet. So I think you got to treat it that way.
Right. So Evan, maybe final thoughts, man. Go ahead, Nick. Go ahead.
Can I actually, let me piggyback. We love asking Clint stuff now. The fact that we have multiple LLMs that are all of a considerable size now, we've got 4 or 5 to choose from. Do you think that actually makes a bet like Cursor maybe a little bit more safe than you're initially describing, right? Because let's say Cursor is utilizing someone's LLM, and they're like, oh, well, we're going to acquire you. They say no. Cursor can then say, okay, I'm going to go to the other 4 and see what we got. And then at least there's an exit. At least there's an escape path, because no one's going to let that slip, and it still might be a competitive market. So that's So I see.
I see it that way.
Yeah.
I don't see these things as just all outright duds because the big bad platform can cut them off or take or essentially compete. I just think you have to keep that in the back of your mind. That is a major risk. It's a major risk for, even though they have substitutes, right? At the end of the day, there is substitutes available. I still think it's a outsized risk that you just have to be mindful of when you're investing in these things. And I just think you have to position size. Well, I wouldn't bet everything on one app. I wouldn't say, hey, this is who I'm riding with, and let's see what happens. I think, that's kind of my mentality on these.
Right. So Evan, So Evan, on that point, right? I mean, how big could some of these AI apps get, right? I mean, if I look at like the App Store on Apple, there's obviously a handful of companies that are like $1 trillion apps. I mean, they got a lot of other businesses, right? Hyperscalers, et cetera, right? But most of those companies, are like sub $100 billion companies, right? Probably closer to like, 25 to 50 billion, right? Type businesses. And those are the large ones, right? So, I mean, this is a different investment thesis, like would you agree? Like you got to get into these things. If you want a kind of a 10x type opportunity, you got to get in when they're like at the $1 or $2 billion mark, because they might only be a 15 or $20 billion company, right?
I mean, the logic, the rationale says yes, right? You know, at the end of the day, Cursor is now worth more than GitLab, and GitLab is like public and worth like 8.6 billion, and you just valued this company, which is less than a year and a half old, with 50x ARR or 50x revenue. So you know, you have to. Investing today at that valuation, you have to believe that the TAM is going to expand substantially more than it exists today, which is actually very interesting, considering that like there's a pretty widespread belief that developer requirements are actually going to decline. Like you won't need as many developers to build apps. So it's like, you know, it's kind of interesting. The TAM is very different. I think that we've sort of talked about it in an earlier segment, is so we haven't really figured out what the front door is going to be, what the interface for people to interact with these AI apps is going to be. And that's where you see, you know, companies like Perplexity, you have to see companies like Cursor, you see companies like Harvey or Norm, where like, hey, at the end of the day, like we're sort of the entryway, the UX for someone to get to use these AI tools in a way that's very optimized for a specific outcome. I think the perfect and most well-known example of this is Canva, right? Like they just like took an idea and they're like, we're the front door for designers, for people who are like low code designers, and you can use our tools and you can use AI and you can easily generate these things.
Right.
I don't know in the future, in a world where you have, you know, APIs where they can talk to each other, you have agents that can do multitasks at the same time, that the on-ramp, the interface that you interact with is going to be through one of these apps. And so I worry that there's a defense, like what Clint said, we're citing him all day today, but like I think the moat is very, very fragile. I'm a believer that the moat is very fragile. And, you know, Cursor is a great example because it's sort of model agnostic. Like the developer at the end of the day decides which underlying model they want to help power their code. And it can be everything from Gemini to Claude or whatever. And so they can build on any one of those things, which is quite interesting. But at the same time, someone could come disrupt them right away. Like let's say the world moves to the developer ecosystem moves to a world where you talk at your app with your voice. Suddenly, like that's no longer like it's not as valuable anymore.
Or you have an agent that you've hired as your CTO, and it's talking to Cursor and right.
Yeah, you know what I mean? So my dad always had a saying when we were growing up, is like anything that goes up fast can come down just as fast. Yeah, sure. Yeah. Fair. So you got to be a little careful. I wouldn't bet everything on. I think there's just so much to play out, which is why like betting at the like picks and shovels is always a safer bet. Yeah. But I do believe that, you know, if you're going for enterprise business, like a Harvey, for example, like I think there is a lot, like those businesses are so slow to move and to adapt to change that, and there's a massive TAM for legal services that you can probably make a really good business. I don't think they're $100 billion businesses, but maybe they're 10. And then you have to right size the bet based on these valuations, which we said in the first segment are incredibly frothy. And it's really hard to justify that sort of 50x valuation, $9.6 billion valuation today.
Yeah, this is where I think where I'm kind of coming out on this. I think the AI platform space, like the OpenAIs, the XAIs of the world, like those, it's kind of been locked in now. I don't think we're going to see like a new entrance, right? And then on top of that, the ones that are kind of pure plays, like the OpenAIs and XAIs, are already large enough, right? Where I think you're probably looking at maybe like a 3 or 4x if you're lucky, right? From here on out, which is nothing wrong with that, right? That's great, right? A 3 or 4x is great, right? But is OpenAI going to go to 2 trillion? It might, right? Could it go to 1 trillion? That would be like a 3x. Like, yeah, but probably could, you know, and that's a really big company. You know what I mean? I just thought like the opportunities are emerging in like the AI infrastructure space and the AI app space. And I think at least my theory on the AI app space is that you got to be in that, you know, you got to be in that kind of $1 billion to $2 billion range as an entry point. Or, you know, like to your point, you're going to these things might be sub $10 billion when they're public, right? So if you're not in at kind of the $1 billion, $2 billion mark, you kind of, I wouldn't say you missed the opportunity, but it's certainly not, I don't think, the right kind of entry point. But that's early, right? So to Clint's point earlier, like you're getting into these businesses and you don't really quite know if they've locked in yet, right? Definitely probably a product market fit, but they probably haven't scaled to the point where like that's going to be the winner, right?
Yeah, all these apps are just user experiences at the end of the day. right? They're moving more and more to no code, right? Because all you're trying to do is essentially speed up development and time to market. They're selling you time. And so that, at the end of the day, my big request is, does a platform get to that faster?
Right.
That's the big question you have to ask. And I think that's you have to lean that way.
Right.
Not saying that these aren't good now. I'm saying that's ultimately where all this, like one of the apps I would love to see is kind of like Replit, right? But there's an application that helps you build everything you need to build a game, to build an app, and to launch that app in quickly using an LLM. That's fantastic. We've seen those come out. They get a lot of users. They're rising business models. The legal app, you're going to end up having probably like a tax application, a financial advice application, or financial planning applications. All these are great. They're just easily to disrupt.
Yep. Fair point.
Fragile moats.
Fragile moats. Yeah. But this is where I think that this is where the opportunities to invest will exist. I think in like 18 to 24 months time. Like, I think this is it. So like, that's why I keep honing on this and kind of I'm putting so much brain power towards it, because the opportunities are all of a sudden just going to present themselves in like the next 6 to 9 months, and you got to jump on it. Right. Or you're going to miss it. Then you'll be gone, right?
It's really hard though in AI though, because the companies that get a valuation of $1 billion plus are generally much earlier stage than the traditional tech companies. So you gotta have like a real bet. Like like, hey, this company made $5 million in revenue this year, and we're giving it $1 billion valuation.
It's very hard.
I remember that being the unicorn. Now you start at a unicorn. Like, think about how absurd things have become, where that was the unicorn, you made it. Now it's like, that's the starting point.
Standard.
It's crazy.
Yeah, you're not wrong, Clint. So I mean, this is why we get paid, I guess, right? We got to make these decisions and kind of pick your spots. But we need
to start an AI app. Let's start the AI app. Guys, for pre-IPO equity. Yeah.
I'm
partnering
in.
with PM Insights.
Come on.
And AG Dillon. And with Vincent, let's go. Let's start the AI pre-IPO app.
I like it. It's worth $1
billion. Sounds like we should get a beer. Exactly.
Start with starting valuation $1 billion.
That's right. Who's in?
Thrive is leaving.
I love it.
Thrive
All right, fellas, this is a good one. Listen, we didn't even talk about XAI buying X today. That was intentional.
Wait, can we talk about it for a second?
We got to.
Go ahead. Do it.
Aaron, Aaron, give us your opinion. No, I want to hear your opinion, Aaron.
Listen, it's like, never bet against Elon Musk.
Well, it's Elon Musk.
Well, no, listen, like, he did the same thing with Solar City. Like, if something isn't going hot, he just has another one of his companies. But like, you can't, like, if as an investor, you cannot lose with this man. He will take care of you. Okay, that's what he did for X. It wasn't coming along quite like everybody wanted it to, so he just popped it into XAI. Everything's fixed, right? So, like, if you're an X shareholder, would you rather own X shares? Is the growth potential better for X or XAI? XAI.
Okay, right? But if you're rowing a two one-person skull boats, right? And then you're like, one's clearly a whole lot faster. Are you going to want to put that other guy in your boat?
Listen, if you're an XAI shareholder, it's okay.
Sorry about that. Yeah.
It's like, all right, I'm not so sure if I'm like super pumped about this. I mean, I'm sure they'll find ways to have synergies, revenue synergies and expense synergies. And obviously Twitter or X is a much more, mature business. So they probably have like an HR team and a finance team and all this other infrastructure that might, be able to help with XAI. But I mean, look, the two companies were already pretty much tied together. It was a big distribution network for XAI. They were using all the data, the X data, right? So, I mean, it's not like so much of a stretch, that you would put the two companies together. It is, and I got to be honest, I don't think it's going to impact XAI's valuation growth path. It just won't. No one's looking at net income at XAI. Come on. Nobody's looking at net income. That thing's like a rocket ship, man. And like, it's just getting started. It's going to be at the $300 billion valuation like OpenAI is in 24 months time. That's my take, right?
Oh,
Not
I
invest
like
in
that
device.
take. Let's
But
put that in the record book.
Just Musk wants a million GPUs, and he's got to raise a ton of capital to do that, and he's not going to leave the valuation low. So the thing's going. So like the X shareholders are going to go along for the ride now, and it will not impact the valuation growth of XAI. That's my take, right? So, and I'm sure there's something that's going on in the background too. I'm sure there was some kind of like revenue sharing agreements between XAI and X for distribution, data, or whatever else. And like now that's all like sorted. X was supposed to own 25% of XAI, so it was already like a major tie up anyway. So maybe this just makes everything
I think
clean.
it was a big. I think that he had to do it. I think he owns the data set, and it puts him in a league with ChatGPT. Because you got to look at, in my opinion, I look at ChatGPT like Microsoft at the end of the day.
Yeah.
So it put him in the direct to consumer dominant position for AI modeling, in my opinion.
Yeah.
In terms of the B2C, I see it very difficult for anyone to compete there. Even though you have more users of ChatGPT, it's just going to be far easier when you're thinking about everything from news apps to searching social media, et cetera. I think I haven't heard much about Llama. I haven't played with Llama in a while, but I would think Llama would have probably the best path to compete at this level, but he had to do it.
Yeah.
You can't have a separate company's data. What if they decide to wall that off?
Sure. Yeah. I just like, look, I respect the fact that Elon Musk takes care of his shareholders. Like not everybody does that. He literally makes it a point to make sure that everybody is okay. So that's a special thing. Not every entrepreneur is like that, right? So like you invest with that fellow and he makes sure you make money, at least in the private markets. I mean, obviously once something goes public and whatever happens, right? But like that is that's a pretty powerful thing. So yeah, man.
Can I ask you, do you think that at 30, I think the valuation of the purchase was $34 billion. Do we believe that was a fair market value?
No, man, it's all funny money.
Okay.
Yeah, listen, he took care of those guys. Let's just call it what it is. He took care of his ex shareholders. That's what he did.
Well,
right?
He also made his XAI shareholders just did a pretty is he a fiduciary for his other shareholders?
I mean, yeah, I mean, you're not wrong.
It's like I'm out.
Yeah, Clint's like I've had enough. Now but I mean, like, you're not wrong. You're not wrong. But I do think, like to my point earlier, I don't think it's going to matter, and I'm sure that's the point he's probably telling people. It's like people are going to invest.
How far away were the? I haven't looked, but how far away were the multiples, the revenue multiples on the two? Because I think it will matter. It'll be erring towards, like, more heavily weighted towards the XAI revenue multiple than it will be the X multiple, I think, right? But I'm not going to say it's a zero. Like no. I mean, but no Nick, change. Everybody's beneficial, right?
Like I want to invest into XAI, right? I'm not looking at the Twitter business, the X business as the driver, as the growth engine in that thing.
Right.
Like I had folks call me up and say, hey, let's buy X. And I'm like, okay. Like, but I'm like, just to be clear, like we can buy it. It's a private company stock. We can go out. They just did the round. There's probably going to be, a secondary market out there. We can probably get our hands on some shares. But we're talking about like, what's it going to do? It's going to go from 44 billion to 90 to 2x.
Yeah.
Right. I mean, like the growth engine of that new company, XAI plus X, is XAI. So that's the interesting asset.
You're not playing in the private markets to have something that kind of looks like the index or a public index.
100%. So like I think I don't really think the thesis changes at all. I don't think
right, because
yeah,
some of it will level out. Effectively, you are de-risking a company to a certain extent, like Clint was alluding to, and I think it will weigh towards or skew towards the XAI for sure.
Yeah.
So
yeah.
A good play.
Yeah, like I would say if you're looking at XAI plus X and you're saying, oh well, like let's look at EBITDA or let's look at this or let's look at that, I think you're viewing.
We're doing the wrong thing. It's a different
incorrectly. Game. Yeah, you're underwriting the company incorrectly.
Yeah,
is what I would say.
It's just hard, like from a fiduciary element of being like, hey, like you got investors on both sides. Was it like an arm's length deal? I like looking at it and being
Evan,
like,
it's in the family though, man. Come on.
It's in the family.
I don't know. All right. Well, I mean,
The
as long
XAI
as
guys,
SpaceX doesn't
listen,
buy it, I'm okay.
XAI investors are going to be fine, right? So, I mean, the guys that got in on the last round, there's going to be some dilution now, right? But this new round's probably going to price at the combined company they were saying is like 113, right? Ish, 110, 113. So, like, I see this new round that they're going to do will probably be in the 115 to 120 range, I would say, right?
Yep.
So, they're going to get, a markup and then some there. And then, like I mentioned, he wants to buy 1 million GPUs. To the point earlier, maybe they don't have the electricity to run all that, right? But that's what he wants to do. So, how do you go from where you're at today to 1 million GPUs? You got to raise like another 30, 40 billion dollars. He's not going to do that at $150 billion valuation. That's a hard no. This thing's going to be 200, 250, 300 before you know it. So I don't you see what I'm saying, Evan? Like, I don't think the XAI guys are going to get all tied up in knots about that. They're going to go from 113, 110 to 300 in 24 months. No one's complaining.
For now. Yep. We'll see. I like your $200 billion valuation for XAI, 24 months.
3.
You want $300 billion valuation, 24 months for XAI. Okay.
For the amount they want to raise, it can't be that far off, right?
Yeah, it's the GPUs. It's like $6 billion for, I think, 100,000 GPUs. So
turn on the TikTok cam. Let's get it on record, and we'll come back in 24 months.
Well, that's barring everything else that's going on right now. With
DeepSeek, geopolitical, energy. There's a lot of things.
Tesla dealership getting defaced and things like that. I mean,
Musk
may not have the golden touch anymore, right?
I don't know.
I don't know about that, but we'll see. He's still a smart guy.
Yeah. Look, I think it goes back to earlier. It's like the earlier point with CoreWeave and everything else. It's like they like the value of AI has to start to pull through. And I think if that starts to pull through and you're starting to see a lot of revenue getting generated on the other side of this stuff, then I think he'll be able to raise that cap. To your point, he'll be able to raise the capital, no problem. If the revenue model doesn't seem to be pulling through, then he might have some challenges raising that much capital. So.
All right. Well, I got to jet, guys.
Okay. Thanks, fellas. This was a good one. Appreciate you guys.
Later.